My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, put it in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Something for everyone. That's how I felt after I saw the remarkable non-farm payroll report this morning, where we created 4.8 million jobs, and that is much stronger than expected. Almost every single sector improved, bringing the unemployment rate down to 11.1. Isn't that the kind of news that makes people want to buy pretty much anything? I mean, that's how I felt in the morning. Then, of course, the rally did taper off near the end of the day ahead of the holiday. Dow ultimately gaining, though, just 92 points. It was up much more. S&P advancing 0.45%. NASDAQ climbing 0.52%. Those are big numbers, but we got spoiled, didn't we? So what do these numbers mean? What reflects the state of the labor market in the middle of June? How does it impact your money? Well, first, you need to understand that we're still nowhere near where we were before the pandemic struck. We still have a lot of ground to make up. The economy was smoking hot. However, I do think it's a legitimate comeback. I'm not going to throw any cold water on. I heard that today. It's a legitimate comeback. And a comeback gives you more latitude to buy stocks that depend on a healthy economy, not just an unhealthy one. But obviously, these numbers are from before the latest outbreak that's forcing many stocks to go back into lockdown mode. So it's more of a glimpse into a post-COVID future that we haven't yet arrived at. Really, though, this was a session that gave everyone, with the exception of those utility lovers, some ammunition. You believe we're having a V-shaped recovery? All right, labor report's pretty good proof. You think it's more of a prolonged U-shaped recovery? Last week's not so hot jobless claims mean there's still plenty to worry about. And if you're terrified of the pandemic, you only need one look at the skyrocketing case numbers to convince yourself, yes, indeed, to buy the Cramer COVID-19 stocks, which I keep in front of you all the time. As for me, this number is why I keep recommending a barbell approach. That's what we're doing with my Travel Trust. We have some exposure to the stay-at-home stocks in the case the pandemic continues growing like crazy, but we also got some industrials in case the recovery keeps rolling along with some recession stocks in case everything goes wrong. How is it possible that we could create so many jobs last month? Simple, the shutdown was temporary. Once it ended, millions of people could go back to work. Meanwhile, the Federal Reserve and the Treasury Department, they bent over backwards, and correctly, by the way, to ensure that companies large and small wouldn't go under and consumers would still have some purchasing power. $1,200 in your pocket and $600 extra for the claims. From the perspective of 2 weeks ago, that plan clearly worked. The reopening was going great. In fact, you could argue it was too great. So many people were going out that it triggered a second wave of infections. Still, I'd rather go into a second wave with 11% unemployment than with 13%. Now, obviously, small and medium-sized businesses are still being crushed. They'll struggle here thanks to the need to maintain social distancing, which we must. A restaurant whose maximum occupancy has been cut in half simply can't make as much money. And I know you people don't want to wear the masks. But you know what? Texas just made it so you had to. At the end of the day, we don't trade the kind of small businesses that are struggling here. It's not what's underneath me when you look at that crawl. We trade the large companies that got bailed out by the Fed and, in many cases, by the Treasury Department. And those two entities are doing it well. If there's another lockdown, and given these horrifying numbers from the South and the Southwest, that's a real possibility, then we know what happens. You could be looking at a shutdown of restaurants, entertainment, travel, hospitality. There are sectors that were making a comeback that will be crushed. Remember, this is a huge outbreak in some big states, California, Texas, Florida, Arizona. Altogether, they make up roughly a third of our population. The numbers are horrifying, hence the strength of the Cramer COVID-19 index. So there's something for everybody, but remember, there's nothing to be gleeful about. Which brings us to next week's game plan. Now, there's not a lot of stock news Monday, but we know the news will be dominated by the new COVID numbers from the weekend. Every morning, I listen to Dr. Scott Gottlieb, What a treasure he is. He's the former FDA chief when he comes on Squawk, and he's been painting, oh man, you can go on Twitter if you missed him tonight, a really grim picture of an out-of-control virus that will cause many of us to rethink our plans and sit tight at home. Now, I got to tell you, given this new outbreak, a lot of things are going to be canceled. I think it's become nuts that these sports organizations are all acting like they have games. Wishful thinking. Look, I've said it since the Super Bowl, and I'll say it again. COVID-19 is a brutal disease because it's so contagious that you don't want to go near anyone who might have it, whether you're indoors or out. And that's especially true if they're singing or screaming, which makes my screech-out version of Fly, Eagles, Fly seem like a real bad idea right now. I still feel that people just aren't taking this whole thing seriously enough. I am, and have become what I would say a nuisance advocate of masks. I'm just relentless. And I've been hectored mercilessly on Twitter for being so. Hectored to the point that I finally broke down and said, all right, tell me what you hate. Just give me a list right on my Twitter, at Jimmy Chill. Actually, at Jim Cramer. Let me know. Let's see if we can't do something. Let's make a better mask. So what happens Monday? We tally the big weekend's cases, the hospitalizations, casualties. The higher they are, the more likely the COVID index will keep climbing. Even if you think that most of the valuations are already pretty stretched, as a lot of people on Wall Street do, it could be enough to lead the averages higher. Plus, let's not forget what Larry Williams, the legendary chartist, told us recently. He said there's almost always a July 4th rally that lasts for a day or two after the holiday, too. He nailed this thing better than anyone I've ever seen. If the COVID numbers are bad, expect stay-at-home stocks to lead us higher. If the COVID numbers are surprisingly good, maybe the recovery plays take us up. Hey, if it's really bad, I had Lawrence Kurtzis on this morning from McCormick. Hey, maybe take some of that. On Tuesday, we get some important results from Paychex and Levi Strauss. Paychex is a payroll processor that caters to small and medium-sized businesses. Given today's job numbers, I expect maybe they'll do a little bit better than expectations. As for Levi's, they're moving hard into digital and personalization. Stock's still down a great deal. Who needs pants if you can't go outside? But it's not expensive by any stretch of the imagination. It's a vaccine stock, probably. We have people on camera. People say, hey, that person's not wearing anything underneath. Whatever. Bed Bath & Beyond reports on Wednesday. This is a Mark Tritton quarter. He's the new CEO installed by insurgent activist investors, and he's had his hands full since he's taken over, given that so much of Bed Bath is, let's call it, non-essential. Tritton needs to give us a plan. I bet he delivers, and we'll like it. But remember, this is very much an uphill battle right now. Thank heaven they have some cash. Thursday could be a house of pain. I mean, really. It's Walgreens again. These guys truly are the gang that couldn't shoot straight. I think they'll offer us the usual number of cuts, the forecast bad. Once again, we'll conclude that there's no room for Walgreens in a world where Amazon is king. Back in my hedge fund, you know what we would have done? We've been shorting the stock. But, this market's so full of optimism, I would not chance that right now. Finally, Friday, we get the producer price index. Listen to this. I'm wondering if we're going to start worrying that we did print $2 trillion worth of money to get what's happening, to keep the economy afloat, business interruption, insurance. Honestly, though, the inflation hawks have been wrong year after year after year. Maybe they're going to be wrong again. Bottom line, nothing seems to matter anymore except which stocks to buy. Penny stocks, crazy stocks, blue chips, dividends, cruise ships. You know what? It's staggering when you consider that we still do have 11% unemployment and a totally out-of-control epidemic. What can I say? The stock market is not a proxy for the economy. It's a proxy for big business. Big business is bouncing back and bouncing back with a vengeance. Let's go to Greg in New York. Greg.
Hey, Jim, what's up?
Well, I'm just enjoying the NASDAQ rally. What's up?
Hey, I'm a new investor. A few months, I'm doing really well. And I'm looking to keep my momentum going. I have a stock called Maxar Technologies.
Right.
Part of the aerospace and defense industry.
Yeah, well, that's a speculative stock, but you're a young fella. Satellite communications is very, very difficult because it's not necessarily. I mean, this is the problem with Sirius satellites. People are they don't think it's reliable enough. But you know what? That's a good spec. We should do more on Maxar. It's had a nice little run here. David in New York. David.
Hey, Jim. I wanted to ask you about Coca-Cola.
Well, look, James Quincy is doing a great job, but it's a convenience store play, and people aren't driving. It is in many ways no longer the growth stock it used to be. But it does yield 3.6%. And for income, why own a bond when you can own that with a common stock growth kicker? Rick in Florida. Rick.
Jim, happy 4th of July to you, your family, and your amazing, efficient staff.
Happy Independence Day to you. Thank you.
My question is on First Horizon. I've owned it for a while. I did my homework before I bought it. I know you've mentioned a couple times on the show they completed the merger yesterday. The stock's just unresponsive. I was hoping you could give me some
Rick,
insight.
I got to tell you, this is just baffling. 6.4% yield, down 44%. Brian Jordan, a great banker. Best area in terms of business in the country. I don't like banks, but it's hard to deny that First Horizon isn't going to be a good investment. Let's go to John in Washington. John.
Booyah, Jimmy Chill.
Yo.
Jim, last week you had mentioned Albertsons' new IPO, and you said it wouldn't be a bad idea to get in under $24-25.
Right.
Has your opinion changed?
No, I think it's good. Look, I mean, they liked lemonade today, and I get that. They like Royalty Farm, but then they've cooled to that. I like that. I think they priced Albertsons very inexpensively. But remember, I like IPOs that you can get in on. We have all these hot IPOs, and you say, hey, why didn't you go buy that? Well, you can't get in on it. Albertsons I like because you can. All right, there is something for everyone after that employment number this morning. It is pretty staggering and it's staggeringly bullish. On Man Money tonight, at a time when people are headed to the store less, shelf life extending technology more important than ever? Yes. I'm talking to a private player leading the charge. And it earned the company's a spot on the CNBC Disruptor list. Then biotech stocks tied to coronavirus vaccine development, they've been soaring. But are any worthwhile investments? I'm going to give you my take. And what can Accenture's recent quarter tell us about tech spending and Accenture itself? I'm going to give you my view, so stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.